Hello, and welcome back to another video. I got a new mic. How do I sound? Testing audio 1 2, testing audio 1 2. Nice. All right, welcome back to the Joe Rogan podcast. On today's episode, we're going to be talking about my small account challenge. I posted a TikTok the other day saying how everybody wants an account that looks like this, but they neglect to realize that it needs to look like this first. So instead of just preaching about it, I'm going to do it all over again with you guys. So let's dive into it. Let's see what the plan is. Before I do, make sure to hit that like button. Make sure you're subscribed so you don't miss a thing. And please make a fist with your hand really quick. Then slowly raise your thumb up at the monitor. Okay? Give me a physical thumbs up. Nice. Now that we got that out of the way, let's talk about this small account challenge. So I have multiple accounts on multiple different brokerages, but I started a brand new one on public.com. Check out the link in the description below if you want to follow along or even start your own account with up to $50 of free stocks. On this public brokerage, I'm going to show you guys the power of consistency, dollar cost averaging, and leveraging fractional shares and growing an account. I'm not going to make this a strictly long-term account though, because that might get a little boring for some people, but I'm going to allocate in a fun and educational way to grow safely, consistently, and turn a little bit of money into a lot of bit of money. All right, let's dive into public and see what's going on. So let's open up the app here. Public. Okay. I'm going to record my screen. All right. So on public, we got a few things going on here. Every month, I'm going to be putting in $100. But every time I refer somebody to make an account, I get a free share and they get a free share. So my account's going to grow depending on how many people also sign up. So it's kind of unfair, but it's also just a part of the game because you could also do the same thing. So I started with $100 in my account. It's $140 now. Let's see what I did with that $100. So as I scroll down, this is what my portfolio consists of. You can see I have Coinbase, Tesla, Shopify, Disney, Starbucks, Facebook, and I also have a long-term allocation. And these are the stocks that I plan to hold for a very, very long time. In there, I have Airbnb, Square, Amazon, Altria, and Uber. Okay, so that's great and all. But if we click here, you can actually see how much money I have, all-time gain, daily gain, last price, percentage of portfolio. I'm just going to keep it on how much money I have in there. Since we're only starting with $100, it's easy to see where money goes and why. So if we start with Coinbase, this one's a unique example because I invested in Coinbase today pretty much just to park my money there while I decide what else I want to invest in. Now, this is one strategy that I don't see a lot of people doing, mostly because it's probably not the best strategy, but what it allows me to do is keep my money working for me instead of just sitting in the account. I put $44.81 into Coinbase, bringing my total cash balance to only 96 cents, but I put that money there so it just keeps working, right? I might sell that tomorrow if I'm up, and I might take that money and invest it in something else. Moving down the list, we have Tesla. I have $14 in there, and that's actually because of referrals. So somebody signed up using my link, and it gave me, I think 2 people did this, so it gave me like $7 each. Now, I'm just going to keep it there. Let's see percentage wise, total gain percentage. I have a 2.34% gain on Tesla. I'm probably going to hold that for a little bit longer. I might sell out of it. I'm not sure. It just all depends on where the market goes from here. Shopify, same scenario as Tesla. There's $8 in there. I think I got that. Let's see, that was a $1 gain. 60 cents gain. I mean, these are small gains, but this is the small account challenge. There's $8.60 in Shopify. Somebody signed up. I chose Shopify as the stock that I want my money to go into. So that's in there. I have Disney. You can't go wrong with the mouse. Starbucks is an interesting one. So Disney, I invested in because I believe in their park growth. I love what they're doing with streaming and movies and licensing and merchandise. And I just think you can't go wrong with Disney. But Starbucks, I actually posted on Public my reasoning for investing in Starbucks. So if we just go to view all posts, scroll on down to Starbucks, I said, I've decided every time my wife and I go to Starbucks, I will throw $5 at Starbucks. Put your money where your money gets put. So every time I go to Starbucks now, I'm going to invest $5 into Starbucks shares. Now, that's why I like fractional shares, because every share of Starbucks is $112. Now, it wouldn't make sense for me to spend $112 every single time I go to Starbucks, but I can afford $5 invested into Starbucks every time I go. If I go a couple times a week, that's just a couple times 5. It's not bad at all, and it puts my money to work where my money gets put. Facebook, I think this was another sign-up referral. Pretty much all of the sign-up referral stuff I'm probably going to start trading, but I have $1 in Facebook. I use Instagram. I have a Facebook. I don't use it as much, but I like what they're doing with their technology. They're constantly acquiring new companies and developing new technologies like their Oculus and stuff. So you can't go wrong with Facebook either. Now, let's talk about my long term. Airbnb. I have $25 in there. Again, that's the beauty of fractional shares. Airbnb currently costs $149 a share. That might be a lot. It might take me 2 months of $100 deposit to be able to buy one share of them. By that time, they might already be really expensive. So I can't afford to do that. Thanks to fractional shares, I can now slowly invest my money into them and buy $5 a day, $10 a week, whatever I want to do, whatever I'm comfortable doing, I can do now. Square. I love Square. I missed out on Square a bunch. So back when they were, back when they were around $60, $90, I wanted to get into Square, but I was too scared. And this is the lesson of dollar cost averaging. I wanted a position in Square, but I was distracted. I was investing in other places. So instead of doing that again, I'm just going to start dollar cost averaging my way into a larger position with Square. I like what they're doing with their technology. I like exposure to fintech. I want Square, but I don't want to have that analysis paralysis. I don't want to constantly be scared of the price. I'm just going to start investing into it and see what happens. $5 at a time, $10 at a time. As you can see, I have $10.48 in there. My all-time gain on that is 48 cents. That's fine. It's just going to grow from there. Amazon, I think, is just going to take over the world. I'll leave it at that. I've been an Amazon Prime member for well over 10 years now. Why would I not be invested in them? Always put your money where your money gets put. That's what I always like to say. So we also have Altria. I want a solid balance between growth and dividend stocks. I don't want my entire portfolio to be Airbnbs, Squares, and Facebooks, and Shopifys, and Teslas. You know, I want solid dividend, and Altria is exactly that. They have a track record of increasing their dividend payment every year. They see if does it tell you what their dividend yield is? I think it's like 7% or 5%, something like that. I want to grow that position over time, and I want to capture that dividend, and then I want that dividend to reinvest into itself through DRIP, which I can also do on Public. So that is my first position into a value dividend paying stable stock that I'm not expecting it to go crazy. I just want that consistency in my portfolio. Since I'm younger, I like to balance it 30% dividends and then 70% growth if I can. Right now, I'm a little bit more weighted towards growth, but that's okay. I will reallocate, or I will allocate more money over time and start growing a dividend position in other shares as well. Then last but not least, my favorite, Uber. So I want all of the Uber shares available. I personally think that Uber is just a sleeping giant. Uber is spending so much money to grow. And I think that is really important. When you fly to another country, when you fly to another city, you don't call a taxi anymore. You take an Uber. Whenever I'm hungry, I order Uber Eats. So why would I not also invest in Uber? I like their company. I like their services. I like what they're doing. So I like the stock. Well, that's it. Very simple. Put your money where your money gets put. And that is an overview of how I'm starting my public portfolio. Let's see where this goes next. Now that you've seen a quick little intro about how I'm building out this public portfolio, don't forget, if you go down to the description, you can actually download public as well. You can follow along live every time I post that says what I bought, why I bought it, etc., etc. So I look forward to seeing you on public. Don't forget to hit that like button. Don't forget to subscribe, and I will see you on the next episode.